Alright guys, we've just had the release from German CPI, the Consumer Price Index from German. As you know, Germany is really important when it comes to Eurozone, Europe. And the CPI looks good, alright? It doesn't look too bad. I have the numbers here. As so the unemployment rate for UK, but that's already another story. So let's touch base on on German first. So the German CPI month over month came in at a negative 0.1% from the previous of 0.3%. So a 0.4% reduction coming to the negative territory. So that is really good for German. Congratulations. Same goes for the German CPI year over year, from the month of August last year in 2023 to the August this year 2024. The previous was 2.3%. From August 2022 to August 2023, it was 2.3%. And then the consensus for this year over year, so 23 August to 24 August, was at 1.9%, and it actually in actual coming at 1.9%. So this is really good numbers, looking great for German. But of course, this doesn't help the euro to be stronger on against Japanese yen or against CHF, against the pound, because I can see that the unemployment rate in the UK area came in at 4.1% from the previous of 4.2%. It's still as the consensus expected, but employment change 3 months over 3 months. The month of a month from month of July, it came in much better, all right? So the consensus was 115,000 people expected to be employed, but it came in nearly double, 265,000 for the actual. So when I look to these numbers from UK and from from German, sorry, I'm expecting a little bit more of a data-dependent approach from the ECB on Thursday. And don't forget that we have the CPI as well for USA tomorrow, all right? So 10:30 p.m. in Australia time, we're going to have the CPI for USA. It's going to be very important to check how the CPI number will come out into the media, because this will decide whether the Fed is going to do a 25, whether the Fed is going to do a 50, or if the Fed is going to do a 25 this meeting and maybe another 25 in the next one and maybe another 25 in December. So things are looking messy at the moment, but there is full of opportunities like euro-dollar to the upside. I still believe that there is a potential to euro-dollar to continue to go higher and higher and higher. The RR looks much better to the upside with in my trading range of a 2.2% return to a 1% risking trade if we get into the market at this moment. But to the downside, it's so forth a 1-to-1 risk reward. So my portfolio right now, I'm long in euro-dollar for the upcoming CPI tomorrow on USA CPI and for the Europe ECB decision rate. The decision rate is 25 basis points widely expected, but it's what they say it's going to make the importance for the trade. Most probably, Lagarde will maintain a very data-dependent approach, and being very honest, she should, because with some numbers we've had on the inflation, it is looking great, but there is a few things more to be done on the under the employment market, so the labor market. So therefore, I do believe that maintaining a data-dependent approach is the best scenario for the ECB, and not being too aggressive towards dovishness and not as well being too aggressive towards hawkish would maintain the euro stronger than the US dollar. All right. So my opinion is that yes, euro dollar looks good for a long position. This is what I have at the moment on my portfolio. So hopefully we can hold this trade until Friday and see some good movements on the price. Guys, thank you so much. Don't forget that in a few hours, 5 to 6 p.m. in Australia time, we're going to have the webinar, and I'll wait you there, all right? If you haven't yet registered yourself, just go to the description of the video and register yourself right there. Thank you so much. I see you tonight on the webinar, or I see you in the next video. Bye-bye.